Good morning, guys. Tommy here. Doing another market trend analysis video, part of our regular series here to look at kind of the cycle the crypto market is in. Once again, this is one of the most important things for us to pay attention to as we go through these cycles. As I've gone through a lot of these cycles, we learn that the cycles are extremely important to pay attention to, so you have a good idea when to get in and out of the market. Of course, none of this is financial advice, just my own observations of the market. So it's an interesting time to check this out, on the back of kind of the SEC's actions the past week, which is another video I've been working on, and I'll release that this week. Kind of my thoughts on the on everything that's going on. But yeah, the SEC came down pretty hard on crypto and on Binance and on Coinbase, as you guys probably have heard. It's pretty huge news this year. They came out and named a number of cryptos as securities, and of course are attacking the exchanges, Coinbase and Binance. And Coinbase is one I love the stance Coinbase is taking. I love they've pursued regulation with SEC, but the SEC didn't really want to. And anyway, we can talk more about that on another video. But for this video, I want to look more at kind of where we're at again with these market cycles. So again, these are logarithmic regression charts, and here's the red line is kind of the predictor of where the price would go, and the orange line is where that prediction line was at that point in time. And so the orange line is a great representation of how accurate is this red line. And you can see toward the beginning of the charts, there was a lot of volatility, but it's actually been a pretty accurate predictor for a few years for the total market cap and some other and if we're looking directly at some other coins as well. So let's go into it. And I want to get to altcoins here. That's the one I'm really focused on because altcoins got hit pretty hard by the SEC. But let's just run through these charts here real quick. Here we see the percent deviation is quite low. Again, these charts were inspired by Charles Lello, who was doing this on Bitcoin Talk about 10 years ago. The time deviation, again, is one I created, and the idea here is we're the growth rate of the charts, keep in mind, reduces over time. So here you see the market cap is currently about 950 billion, and the trend line is about 1.8 billion, and growing at about 60% per year. This is the total market cap of crypto. But you can see how that varies with, say, altcoins, where altcoins are growing at 93.6% per year. They're growing faster, which makes sense because small caps have a faster growth rate and more volatility. But check this out, the time deviation. So again, factors for with the growth rate reducing over time, how many months would it take to catch up to that fair valuation? And here we are right here on the total market cap. We're about 15 months undervalued, which is near historical lows. So again, crypto is very undervalued again, you guys. Based on my charts and analysis here, I feel crypto is very undervalued, and altcoins are even more severe. And this is what I want to show you guys. Look at this. The percent deviation is extremely low. You should keep in mind that this number should be higher over time because the market should stabilize, and you see that across different assets. But look at this; it's nearly to the extent of overextended as that crash from COVID. I mean, that's like this sharp line here was that COVID market crash in March 2020. Before that, it wasn't even that bad. Like, look where we are right now, you guys. This is nuts. Look at the time deviation chart. Here, it's even worse than that. So again, I just to make the point, you guys, crypto is extremely undervalued at this time, especially altcoins. As we go on, I'll show you how some of the other assets look, but I mean, this is crazy. And altcoins were already struggling, and then the SEC came out, doing their thing, and this little thing is them hammering altcoins. It's like, man, come on, Anyway, let's move on here. Ethereum, same sort of story. This chart is still kind of finding its level for it to normalize. Again, you saw on the total market cap one. It's found the level pretty well. On Ethereum, it's still finding it. On altcoins, it seems it's found it pretty well. Percent deviation on Ethereum is, pretty low. And time deviation is also, again, worse than we were in that crash from COVID back in 2020. And here we were. This was around the FTX debacle. You guys remember that some months ago? Ethereum was around 1200. Extremely undervalued. I made a video back then basically calling it out, calling these extreme undervaluations, and then Ethereum popped and did pretty well. And Ethereum is still around $1,700, and that just goes to show you guys, like, we're expecting growth over time, right? We're expecting the valuation to increase over time generally. So, here we see that because the price hasn't grown with Ethereum that much, it's falling behind on this. So once again, Ethereum is also extremely undervalued right now, you guys. Moving on to Bitcoin, and Bitcoin's kind of fared the best here, and you can see the growth rate here, 37.5%. So that's lower than our other ones. You guys remember we saw that altcoins were 90%. That's the point. So Bitcoin is the most stable out of these assets, but also has the least upside, but it's the least volatility as well. So that's good for a lot of investors who like that sort of stuff, because we all appreciate stability. So looking at Bitcoin, and again, this chart has normalized over time as well too. So this seems to be a pretty good predictor. Of course, you have to account that things could adjust, but it seems like it's a pretty good predictor of where the price growth of Bitcoin goes over time. Here we see the percent deviation, again, at lows, not quite extreme as the others. And same thing here with the time deviation. Bitcoin was more undervalued than ever back in that, I believe this was around the FTX times about 6 months ago or so. Bitcoin had a nice bounce. You guys remember, what were the lows on Bitcoins? It was about half the price as it is right now. 16,000 or so, yeah, and now it's around 26,000, so not quite half. But you see, Bitcoin was extremely undervalued, had a nice bounce, and Bitcoin is also undervalued, not to the extremes of the others. But the big takeaway for me in all this, when I'm looking at this data, is again the altcoins, man. Altcoins have, you notice the charts of Bitcoin had a nice bounce. Ethereum even had a nice bounce, though it retreated. But poor altcoins have just been, look at this, man, have just been suffering, and the good news is we are overextended significantly to the downside, and I think it kind of acts like a spring, like it can bounce back very strongly. When that will take place, we don't know exactly, but I mean, this is kind of a fun one to look at back here in 2017. Back here, Ethereum was at $7, and there were a lot of people hating on Ethereum. Ethereum is dead, and look what happened, man. So it moved very quickly. So when things turn on, they can turn on very quickly. If you look at the chart up to this point here, you don't know where the end is in sight. Right? How long does the quote unquote suffering continue for? And then you have the respite. So here, similar story. We don't know how long this goes on for, but the good news is when you're overextended this much, things can come back very quickly. So all in all, I'd say hang in there, guys. Dollar cost average is a great strategy in general for both getting in and out of positions. Not financial advice, just something I've seen from my experience. But don't want to make this video too long. Please leave your comments in the comment section. I want to know what you guys think. Throw a like if you haven't, subscribe if you haven't. I will continue doing these regular updates on the crypto market cycle because I think it's extremely important. I wish you guys the best. Catch you guys soon.